Looking at FX power hours.
Ooh.
What time of day is most volatile?
Can I take a guess?
You can. And
what?
no, please go ahead. Take a guess.
I'm going to guess at about 1 p.m. Central Time because that's a lot of the economic news.
That's a good guess. Mike, any guesses?
I'm going to say 12:59 p.m. Central Time.
And above and earlier?
Yeah,
You're trying to undercut him?
Yeah.
How was that?
Or it could be as simple as
Could be early morning
8:30
too,
in
because
the
that's
morning
like
when the market's open, things are flying.
Well, let's look into it. I've got some
All
some nice data visualizations. I think
Cool.
this is a nice, nothing too surprising here, but maybe a little surprising for you guys.
Whoa.
Let's go to the next slide. Just what we looked at the past 3 years of price action using hourly data and just trying to identify some of these trading windows. If your strategy is for works better under low volatility, you get your answers here. If you want high volatility, you want some of that movement, also analyze that as well. Looking at Central Standard Time and looking at some trading sessions. We've got some overlap here, but this kind of gets your gears turning as to how I think about FX markets that trade 24 hours a day. You can kind of break them up into the Asian session, London, the New York-London overlap, which will be very important to see. You might get some big answers there.
Okay.
The New York session, which I've kind of shifted to the morning a little bit, and specifically calling out our U.S. afternoon, and just measured in pips the high-low range for each hour. So let's go over to our first visualization here, looking at trading sessions. You've got your 7 major U.S. dollar pairs. Right away, you're seeing U.S. dollar, Japanese yen, the most volatile across the board. But you also factor in this is per pip, and that exchange rate, dollar yen, you tend to see more pip movement, whereas in something like the Australian dollar, US dollar, the exchange rate is so low there at 65 cents that looking at pips alone doesn't give you the full context for what a percentage move would be. And then you also, to get your gears turning, have to factor in, what the margin requirements are if you're looking at both ends of that spectrum, comparing Australian dollar and Japanese yen. With the same amount of capital, you're able to put on more leverage with that Australian dollar than that Japanese yen. So I've done some breakdowns on other Forex Focus episodes on how that kind of compares. But here, just looking at pips alone, pip ranges, what you're seeing is that New York-London overlap, the most volatile. So that 7 a.m. to 10 a.m. window here, Central Time. The answer there for your highest volatility range.
Reports and stuff that comes out like 7 to 7:30.
Exactly. So that is the majority of U.S. Economic data points come at 8:30 Eastern, 7:30 Central Time. So you're seeing a lot of this, and you're also seeing when U.S. participants come in around 6, 7, they're reacting to the European moves pre-market, and then you also get some either big continuations or reversals right on U.S. market open as well. So some intricacies there, but that 7 to 10 a.m. window coming out ahead. And looking at the least volatile, you're looking at that afternoon session, which is why we kind of I called that out specifically, not tied to a specific region perhaps, but you're getting U.S. only participants. You're kind of everybody's reacting to everybody's day, and so it's really the laggard
Lunchtime.
Exactly.
Damn, so I was wrong. We were both wrong.
But if you're thinking just he was right because he undercut you. Going to 12,
Bingo, baby.
12:59 and earlier. But you're right. We have some recency bias with the Fed announcement last week. that's one of the only major things that is in the afternoon.
Yeah.
And now with the current administration, we've gotten some pops in volatility, in the afternoon, kind of sporadically, less scheduled. And then kicking it over to a heat map I made that breaks this down more granularly. We're looking by hour, a lot of numbers here, but if you're just looking at colors, oh man, it got cut off. We've got, sorry that the pairs look a little weird there on the side.
It'll be okay.
But,
All right.
yeah, here looking, you can tell which hours, the darkest shades hovering in that 7 a.m. to 10 a.m. And what is surprising is that kind of fall off even at 11 a.m. after, European participants pack it up for the day. That was surprising to me that we don't have as gradual volatility for, these are all U.S. dollar pairs. And the fact that doesn't continue as smoothly throughout the U.S. session, a bit surprising to me. But you're getting that dollar yen, you're getting some volatility
Throughout.
around the clock. And then, looking at that afternoon, 4 p.m., some pretty abysmal small numbers there. So if you have a low volatility strategy you like to employ, that's the time that maybe you look to it. But there's also the fact that there's low volatility because there is low liquidity. And so you can tend to see spreads widen there as well, with the lack of participants. So kicking it over to the key takeaways, do you guys have anything stick out to you? I've talked through a lot of these that, the big answer is that early morning U.S. session where you have both European and U.S. participants. Afternoons, the least volatile and least liquid, and dollar yen on a per pip basis alone, the most volatile.
That was what stuck out to me.
Yeah.
Was that the dollar Japanese yen was the most volatile of the group.
Yeah, so if you're looking for pip movement, that's where you look. But again, it is an interesting exercise. Maybe I can hop back on here when we look at kind of product comparisons alone, of how you get more leverage. Even going back to, I used the Australian dollar, US dollar as an example, but maybe even the euro dollar, the best example, because there you have higher per pip volatility than the Australian dollar and only 2% margin.